Good afternoon and welcome to the end of day review for today. And today is May 24th, 2024, and it's Friday. It's the last 20 day of this week. And this week we are in week 21. Next week will be the 22. And this week we don't have any special high impact news for that matter. We do have one, which is FOMC meeting. We can see that on Wednesday it really fluctuates right there. Lots of good move and lots of big move right there. Other than that, we don't have any significant. But actually the market moved a lot this week despite that because of the NVIDIA earning report release after the markets on Wednesday. So we see the market fluctuates, but on Thursday it really sell off, but today it's recover. That's how market move. So we see the Thursday reversal and Friday kind of come back. And next week we anticipate the data release for GDP data on May 30. May 30, right here, the last Thursday of the month, where we expect the GDP data, and then the first Friday of the month, the non-farm payroll. So non-farm payroll on June 7. And the week after that gonna be go back to the circle of CPI data and then Fed meeting. Alright, so we try to get the economic events into our mind every time we do review or every time we do recording for that matter, because we want to get our mind into a perspective of the economic event where it drives the stock markets. Alright, now let's get into the charts. See how the price move for today. So this morning when we start out the day, we look at the 4-hour time frame. Right, here's our screenshot before the start of the day, that's what we call start of the day. And we looked like this, we thought, well, maybe, what do we see right there? We see that it's a leg down, right? So there's gonna be a retracement, and it's gonna be a next leg down, second leg down for that matter. And then we look on the 1-hour time frame. We see right there, what you see that it tests from above. So it's gonna break, right? It tests from above, and then it's gonna be a full breakout, which is, it's gonna be break to the downside. That's what we thought, and we did took the trade right here on the 1-hour time frame, right here. So we see that the level right there. So it fits our pattern or our setup or model for that reason, right? We see test from above. You see that? Test from the double. So we're gonna break it. Then it break. It did, but it's not much. You see that? And right here at 9. Right here. Okay. Yeah, we go in right here. We do a sell right there. No, actually, yeah. So finish at 45. Yeah, let's look at the first trade we check. Let's see what the first trade. Yeah, basically right here. Right there. So as 9:50. Yeah, we're going early at 9:50. So basically we saw a touch from above. So now it will break, right? That's our logic. It's gonna break this level. But the question we need to ask ourselves, so then what is the targets then? Any imbalance liquidity? Right, market always seeks external liquidity range to internal liquidity range right there. And that's our first trade. A look at the recording. Alright, here's the recording trade we take. So we put in a sell stop right there at 99.50 right there. 99.50. Let's see, 99.50 right there. Yeah, right there to 99.50 at that level, which is right here. We put a sell stop right here at 9.15. Yeah, it did hit our trade right there. It did hit our order right there. Right, order, boom. Then it reversed back. Yeah, it did move to our traction just a little bit, but then it just reversed very fast. So that's our first trade right there. We take a lot about $100 right there. That's fine. Okay, now let's see what the logic right here. Even though on 1 hour time frame we see that, but look on the 15-minute time frame, we see it just feather gap down and then feather gap up and retest right there. So basically a balanced price range retest right there. So in 15 minutes it kind of bullish, but if we look on 1 hour, we thought that it can, look at that, it's gonna break. So a little bit confused right there. But anyway, the more Brexit, there are more more clarities it becomes to us. Yeah, so we go in at 9:15 right here. This kind of flip on us, and it's very, very tricky right here. And after we took that trade, right, and we're thinking to ourselves right here, when we saw break and then test from above, before that, you see that it break this level, test from below. Wow. And break it and test from above, break it one last time. That's amazing right there. This is exactly double break we're talking about. Break one and break twice. Right here. Right, break it, retest. Okay, it just reverse back right away. and then retest from below, break it, retest from break it, and then reverse very quick reaction. Yeah, let's take the trade number 2 and number 3 we take. Alright, you see what we do right here? Basically, we put a buy stop here and sell stop here. We put a sell stop at 299 level and 50.05 the buy stop. 99 and right here 30 05. So basically we see that level right there. We say that if it break, you see the level, it tests both level after the 55 we say. And we after the first trade we lost, we saw that this is the range right there, basically here. Right here, this candle. So we think that if it break the level, we're gonna sell. And if it break the level, then we're gonna buy them. So that's pretty good idea right there. That the range at this candle. And let's see how it's play out. So alright, a few hour long buy stop right there, which is long position. But you see that as soon as you feel that, what happened? Wow, we move our stop loss. But as soon as it's like that, we're thinking about get out of the trade right here, because sooner we see that it touched from above, it will break it. And look, it break it. Right there. Oh, okay. Yeah, we stop. So that's our second trade right there. So we go long right there, and then it's come back. And now look at the third trade we take is okay. So what do we do? That we sell them. Because we thought, oh wow, now it break that level, so we sell them. And we jump to 5 contract. Maybe this a revenge trade right now. After 2 loss, we try to get the loss back, I guess. We jump to 5 contract because we're very sure that, well, if it come here, it's not gonna break the level, then it can come down here, it's gonna break the level. So that's the logic right there. But it's so funny. Alright. So it go into our way. Sure. Go to our way. Well, at one point we have profit right there. 800. We're thinking about, wow, get out. Get out there and take quick profits. But then we decide not to. We stay in the trade, and look, we feel something not right, because as soon as we see that they here the fall breakout, normally the fall breakout it work, it will like a flush. It flush very fast. That's the idea there, and we feel something not right. Right there. With something not right, we almost, take out a trade, but for some reason we just stay back, and look what happened. We got stop out. If we watch in the real time, you can see that they react very fast. Just look, you see. Look. Now after. Yeah, you see that? It's like it's jumped from somewhere. from nowhere. It's just flush up right there. And as soon as we saw that phenomenal, we switched back to long right away. We know that, oh, the sets the program is to buy now. Yeah, look at that. And we decide and go and buy them. Yeah, want to see a giant, candle right there. We jump in to buy them. And we move our target, move stop loss. With to put the target 1312. Yeah. Yeah, that's our third trade right there. Okay, let's fast forward. We're a little bit nervous right here. Wow. We thought, wow, should we still stay? Well, at one point it's like we give back a lot right there. A little bit nervous, but we stay with the trade because we see that there's no reason for it to come back right there, because that's, you see the level. If we look at in the chart right here, if that's 1, that's 2, that's 3, the reason they come back here in order to break. That's the reason why we believe in ourselves and we decide to stay in the trade, even though it's very, very volatile right there. And we move our target to, at first we arbitrate there, but then when we check on the level, we move to 13 right there. And you see that we move 1350. All right, the reason that because we look on the 5 minutes, not 15 minutes, we saw the level right here, right? 15 minutes regular trading, and we saw the level, look the level right here, where the breakdown happened yesterday in the PM. You see that level is 50, 13, 75. That's the reason why we try to put our target just 1 pip below that, so it can hit 50, right? We put 1 pip so it can hit it, so we don't have to miss that, because sometimes it not hit exactly that level. So 1 pip below should be good enough. And look, it did hit exactly at 50. See that? If we put a 75, it did not hit that. We will still stay in the trade right there. So we have a handsome profit right there. 3,500. You see right here. Where's the, yeah, right here. You see this candle high is 50, just 1 pip below that. I think if we don't know, if we for some reason we picky, right? We try to put exactly 75, we miss that target right there, and look, we had to we had to give up all again right there. I don't know, maybe we get nervous and freak out right here, because it come back exactly at level we go in. So basically we give $4,000, we give back all that gain, and we go back to break even. So I don't know if that if this not hit our target, I don't know how we're gonna make that decision. We don't know. That's which we're so glad that it hit target, we out of the trade, so we don't have to make that decision. But anyway, after this move, reverse back right away, then it's a giant move right there. So we see that whenever you have a one leg up and it break it and then it reverse back right away, that is a signal that it's gonna be a second leg up. The same with the leg down right there. Right, second leg down, when you see a break and reverse back right away, in this case it's gonna be second leg down. And right here with the reverse back right away, then you know because I leg up. Right there. Yeah, that's our first, two trade there. We take two more trade, but it's not much. But let's watch them and see what. Before that, we're gonna show something real quick. Here's the recording in real time. You see how the markets. So basically, the markets give us opportunity. You remember we short right here when we break down the level. At first we go long, right, and then this candle stop out, and then we go short right there, and then boom, you're gonna see. Yeah, we go short right here is right, but we have to aim at this target. Otherwise, we will be stop out. But let's see, why did we set a target on that trade? Oh, we put our target to 88. Yeah, too much. That's the reason why it did not hit our target. If we target around here, then we will be perfect right there. Oh, like that. Okay, we see now. We should put our target just right at this level, and we didn't do that. That's the reason why we got stop out. And look, the last minute, look at it, at 10. So at 10 is a very critical time to watch. Do you see that? All of a sudden it come from nowhere. And as soon as we saw that, we got ready to go along right away. Wait for this, go up here. I mean, if we have, brave enough, we can go in right here. As soon as you see the jump right there from nowhere, if you use that, yeah, that's what we want to show right there. So that means the market showed right there that it's gonna go, it's gonna flip and go, and that's the opportunity come right there for us right there. So sometimes the market show its hand very, very obviously, and we can jump in and take opportunity right there, and that's what we did on the trade number 3. Okay, let's see how we do the last two trades. All right, here's our trade number 4. So basically, we saw that level, right? We saw it test from above twice, and then if it go back, it can break the level. So that's the reason why we put a sell stop right there. And let's see. Yeah, we feel like it's not right, so we move our stop loss and we get out. So that's the trade number 4 right there, which is around 13.12 or 13.12. Yeah, this candle. We thought it's gonna go here Oh yeah, right here, 30-12. So we thought that a touch above, touch above, so we're gonna break the level, but it did not. It flipped. We check a lot right there. Yeah, let's look at trade number 5. Last trade we checked. Okay, so after the last trade, we lost trade here because short them. Then now we saw the flip, so we go long. However, we mistake when we put the targets not close enough. It should be at the level. See that right there? It did go to that level right there. Yes, stop right there. So it did go to the level right here, which is 25 right there. It hit that level. Our target just a little bit there. That's the mistake we have to make. We have to make the equal high right here. You're gonna rate the equal high. So we make mistake on our targets, and it didn't hit the targets. We put a little bit too far. Yeah, you see that? We ended up pay the price for that. Had to move our stop loss, and we got hit. And as soon as we got hit, we jumped to and short them, and we jumped to side 5 right there. That's the mistake we make, but it's okay because we just make a huge gain, and we're a little bit aggressive right there. But anyway, it did not go our way for a short trade right there. Yeah, it come back because we don't want it to come back. We want it to follow through. That's where we tighten our stop loss, and we want to get out. So we still good. We just have a nice profit right there. We're back about $200. We still have 3,200 right there. Okay, so that is what else? That we not have another trade. Let's check. Let's see. That's all the trade that we check right there. But at the end, we saw this setup right here. Beautiful. You see, break it, touch from above, below 1, touch from below 2, and we put a buy stop right here. But we say, oh, because it's not much, at the last hour, so it's not gonna move in much, and this was where we cancel our order. But if we just aim very low right here, we still have 3 point right there. So next time, regardless of the time, whenever we see it up, just put it in, because we need to make ourselves to check the setup, when it show up. That's just muscle memory right there. We need to practice. So, all right, I think that's it for today. We need to review a little bit right here. When you see on the look right here, right? So our idea that it needs to break. Oh. So look at the on the hour. Touch from below, above, and then gonna break down, right? But it only break at that level, and then it's flip back. You see that? You see exactly at 10, flip right there. All right, I think that's it for today. It's a Friday, so let's see what the market brings to us Monday. Bye for now, and have a great night and great weekend. We thank you for your time and interest. We're only grateful for this opportunity. And good night and good luck. Bye for now.